Welcome to Teach Me Online channel. In this video, we will be going over past year questions on asset disposal. Now, there is another video on how to do the disposal accounts and all other information related to this chapter. I have provided the link in the details below, so please do check it out. Now, let's look at the short recap for this chapter. Firstly, you need to know how to calculate the gain or loss on disposal. To do this, you can simply find the difference between selling price and net book value. If net book value is lower than selling price, then the firm gains from disposing the said asset. On the other hand, if net book value is higher than the selling price, then it shows the firm faces loss from disposing the said asset. Now, secondly, you have to know how to record the sale of assets in journals and T accounts. I have explained 4 simple steps in our earlier video. They are: first step is to transfer the assets to disposal. Second step, to transfer provisions to the disposal. Third step is to record the sale of the asset in disposal account. And finally, you have to figure out the gain or loss in the disposal and transferring it to income statement. So we have covered that. Now in this one, we will do 5 examples or 5 past year questions to understand this chapter further. Right, that's it. Let's start with the first question. Now this is a 2019 paper. It says that Amrik started a business on 1st January and purchased a machine costing 18,000. So we know our cost is 18,000. And the depreciation is 20% using reducing balance method. And he sold the machine for 13,300, which means our selling price is 13,300. Alright, when he sold it on 1st July 2018, and they just want us to know what is the profit or loss for the year of the sale of the machine. They also mentioned that there's no depreciation to be charged in the year of disposal. So that's pretty easy. Let's just calculate the depreciation, total depreciation for this particular machine. We bought it on 1st January, so December 31st 2017, it will have a year's depreciation, which will be 20% of 1,800, which is 3,600. Alright, and the machine is sold in 2018, so we would not do any depreciation for the year ending 2018. So we know that total depreciation for the year is 3,600. Now with this, let's calculate the net book value. The net book value would be cost minus total depreciation. Cost is 18,000, whereas total depreciation is 3,600. It gives us 14,400 as your net book value, whereas your selling price was 13,300. Now from here, we know that our net book value is more than our selling price, so there's going to be a loss on disposal. Now how much is the loss? It depends on the difference between the net book value and cost, which is 1,100. We have done this. So this is how you solve this question. You don't have to do any T account. You can just do it by doing the difference between the NBV and selling price. Okay, let's look at the next question. Okay, let's look at question 2. Now, let's look at question 2. Now, this is also a multiple choice question. Now, what does question say? That Asma bought a motor vehicle for 10,000. So that's your cost. She depreciated at the rate of 10% per annum on the cost. So this means this is a straight line method depreciation. Now after 18 months, she sold the motor vehicle for 9,200. Now, since this is a multiple choice question, we can straight away find the profit by calculating the difference between selling price and also the net book value. Now, we know the selling price of this particular motor vehicle is $9,200. Now, whereas the net book value would be cost minus total depreciation. So as I've always said in my previous videos, to do this type of question, it's always good to do the depreciation table beforehand before you attempt the question. That way, once you got your total depreciation out of the way, then solving this question will be really easy. So we know the vehicle was with us for 18 months. So that is 1 year and 6 months. Depreciation for 1 year would be 10% of 10,000, which is $1,000. Whereas for 6 months, we would prorate the depreciation by multiplying it again with 6 months out of 12 months. So that should give us $500. So we know that total depreciation is 1,500. So using this information, we can figure out our net book value. The cost was 10,000. The total depreciation is 1,500. So the net book value should be 8,500. Now looking at this, we know that the selling price is more than the net book value. So there's a gain from this disposal. How much is the gain? The difference between these two, which is $700. There you go. So the profit on disposal was $700. Yeah, pretty easy because this is a multiple choice question. Now the next question we will attempt a bit more challenging one, which is a structured question. Now let's look at the next question. Okay, what does this question say? This question says Bhavani depreciates his fixtures and fittings using the straight line method, and he provides a full year's depreciation in the year of purchase and none in the year of disposal. So if they've given years at the end of figures for the at the end of 2013 and 2014, and they said that there is no additions or disposals during the year ended, the question wants us to figure out the depreciation charge rate that Bayani was applying. Now from here, we do know that straight line method, to calculate this depreciation, all you need is a certain percentage multiplied by the cost. Now, in this case, we don't know what's the rate that Bayani used, but we do know the cost was 42,600. Why it's 42,600? It's stated there, and also they mentioned there was no addition or disposal, so your cost remains the same compared to the previous one. It's the same, right? And we also can figure out the depreciation charge for the year. Now, the depreciation charge for the year would be the difference from last year to this year. The difference is 4,260. So that tells us compared to last year's accumulated depreciation, it has increased by 4,260, which means this year's depreciation must be 4260. So we just figure that out and put it in. Now all you have to do now is figure out the rate. That means finding X. So your X should be 10%. Yep, that's it. This question is done. So that was A. Now let's look at what B wants us to do. In B, they give additional information saying that they bought new fixtures now that cost $12,000 and they paid by check. On 1st August, he sold one. So he bought a new machine fixtures, but he sold an old fixtures, which had a cost of 10,000 and 4 years depreciation had been provided. Right. Name the books of prime entry used on 1st May and 1st August. Now let's go to 1st May. 1st May, we bought new fixtures using check. So we are going to transfer this information to our cash book. Yeah. Now for the second one, that's the prime books of prime entry that we would have used. On 1st August, he sold all fixtures and fittings, which was $10,000, and he paid by cash. Again, there's cash here, so this will be recorded in cash book. And the disposal of this, remember, we have to take out away from our asset and also the provision, so that will be recorded in general journal. So for the second one, second entry, which is on 1st August, you have two separate books of prime entry, which is your general journal and cash book. Yeah, that's it for this question. Pretty easy. Let's move to the next one. Let's see what C wants us to do. C, they've given us a table and they want us to fill in all this. Let's see what they want. So they say they want the information fixtures and fittings at cost on 31st December 2015. Now to do that, we know on 1st May you bought a new fixture. So on 1st January, now for this I would like to also show the T account so you guys can see how it looks like in the T, and we can also do it without T. Yeah. So for this fixtures and fittings account, we know on 1st January 2015 balance brought down was 42,600. So during the year he bought new ones, which is paid by bank, amounting 12,000. Right, so during the end of the year, since the disposal happened in 2016, nothing is recorded in 2015, so balance carried down should be 54,600. Yeah, so that's done. So if you were to do the working here, it should be 42,600 plus 12,000, which should give you $54,600. So that's done. Now, what will happen to 2016? So in 2016, we had a balance brought down of 54,600. On top of that, we sold. We didn't purchase any additional, but we have to transfer to disposal a fitting that was 10,000 in cost. So transfer that to disposal on 1st August. So whatever that's left is your balance for the year, which is 44,600. So in this case, fixtures and fittings at cost on 31st December would be 54,600 minus 10,000, which would give us 44,600. Yeah, so far so good. Looks easy. Now they want to know the depreciation charge for the year. Now remember, as I said, that it's always good for us to do some extra working before we can start this. Now look at the asset that you're disposing. Now what is the accumulated depreciation for this asset? It's easy if you know this, yeah? The accumulated depreciation for this asset would be 10,000 times by 10% and times it by 4 years, because it has been depreciated for 4. So 1 year depreciation charge is 1,000. For 4 years the total depreciation charge would be $4,000. Right? We'll keep this information for later. Now let's try to solve this one. Depreciation charge for the year ended 31st December 2015. Now we know that in 2015 would be 10% of 54,600, which will give us $5,460. Now, how about the accumulated depreciation? Okay, now to calculate the accumulated depreciation, I would rather do you can also calculate mathematically, or I can show this on a T account. Let's say if I have a provision for depreciation of fixtures and fittings account, I know that in the beginning of 2015 my brought down would be 17,040, and for this year the income statement depreciation charge is 5,460. So total will give me 22,500. So my total accumulated depreciation for the year is 22,500. If you want to do it on a calculation basis, it's just 17,040 add up 5,460. Yeah, 22,500. Now That's done. They want us to find the depreciation charge for the year ended 31st December 2016. Now 2016 we are left with how much of the asset? 44,600. So 10% of 44,600 will be 4460. Yeah, so we found out the depreciation charge for the year. Now how do we find the accumulated charges? Now this is a bit tricky. So we just bring down for the following year, which is 22,500, and in depreciation for the year is 4460. Yeah. However, remember we have to transfer from to the disposal the asset that we dispose of, which was worth 10,000, and the total accumulated depreciation which we calculated earlier was 4,000. So we take away the 4,000. That would leave us with the balance carried down for the year. So the total accumulated depreciation for the year would be 22,960. So if you look at the T account, you can see what's happening the entire process. But if you can do it on your own without much of a T account, how would you do this? You can simply do the calculation, which is 22,500 plus 4,460 depreciation for the year. Take away the disposal amount, which was 4,000. So you should get the accumulated depreciation for the year of 22,960. Yeah, this was quite unique question because they don't normally the questions will ask you to prepare the disposal account, the machine account, in this case the fixtures account or the provision account. So this is the first time they've given you a table and they want you to work step by step the numbers and give just the figures. I hope this was easy. Now let's look at the final question for this particular question, which is section D. Now, section D, they say state the double entry needed to record the depreciation charge for the year ended. So we just have to record the depreciation charge. So how do we do that? We know we have to record it in the provision for depreciation and we transfer it to income statement. So your provision account is always credited. So you credit your provision account and debit your income statement. Now, why do we debit our income statement? Because any depreciation is an expense account. So any expense account will always be debited. Any income then transfer to income statement on the credit side. So if you know this, then it is easier to figure this out. Now, if you don't understand this, please go and watch my other videos on why it is on the debit side or on the credit side. Yeah. Okay. That was pretty simple. So in the debit entry, we would have income statement. On the credit entry, we would have provision for depreciation. That's it. This question is done. Okay, in this question, they're asking us to prepare the fixtures and fittings account, provision for depreciation account, and also the disposal account. Now they've mentioned here that they've got fixtures and fittings at cost in the beginning, 28,600, and they have a balance brought down in their provision account for 6,185. So along the way, they sold a fixture for 1,150 and they purchased a new one. Most importantly, they said their depreciation policy is to depreciate 10% using the reducing balance method. And the question also mentioned that there is no depreciation charges in the year of disposal and they charge a full year depreciation in the year of purchase. Now, as usual, before we can complete the T account, we would actually finish the working. So we will do the depreciation working and get. Now, if you notice, the years they've given here is not your normal year ending 31st December. This one, their year ending is 30th September 2020. So I would suggest that you guys do the timeline so you guys can see which timeline you guys are working on and it kind of makes your work much easier. So for this, the year ended is 30th September 2020. So it must have started on 1st October 2019. So that's your 1 year. So using this timeline, let's see what happened during the year we sold an asset. Now let's look at this asset, these fixtures, let's call this A. So we can find the total depreciation for this for us to do the disposal account later on. And we will use this information to calculate the total depreciation for the year for the rest of the assets. Yeah. Now let's look at A's depreciation. For A, it was purchased on 1st February 2018. So this asset must have been around since which financial year? Yes, it should be around 1st October 2017 till 30th September 2018, and from there it should have been with us till the 2019 and 2020. So basically we have to provide 2 years depreciation for this fixtures area, because since even though we had it in 2020, as the question have said that there's no depreciation charge in the year of disposal, so in 2020 we would not calculate the depreciation. So depreciation charge for 30th September 2018 would be 10% of 1500, which is 150. Now for the following year, 30th September 2019, it would be 10% of 1350. Why is that so? Because of they mentioned that we have to use the reducing balance method. So it should be 1500 take away 150 for your net book value. So 10% of 1350 will give us 135. So total depreciation charges will be 285 for this particular A, fixture A. Yeah. So we've got that out of the way. Now the rest of the depreciation for the other fixtures, let's call that the others. So how do we find this? The same thing, cost minus total depreciation times 10%. Now the cost here would be 28,600. We add 3,500 since we have a new addition, and we take away 1,500 since we have disposed them. So that will be your cost, and your total depreciation should be 6,185. Take away 285 since this is your fixture A, which is no longer with us. So from that, the total net of this we multiply it with 10%. So that should give us 30,600 minus 5,900 times 10%. So depreciation charge for the year should be 2,470. Okay, so yeah, we've got these are the workings that you need before we can work on the T account itself. Now I would suggest you guys write this down on a piece of paper, and then we will do the first account, which is your fixtures and fittings account. Now fixtures and fittings, we know that on October 1st 2019 debit balance should be 28,600. So during the year we disposed on January 31st 1,500, so that will be credited, and we bought 3,500 worth of fixtures on March 31st. So we would debit that. Since the fixtures were paid by check, we would actually transfer it to bank. Yeah. So with this, we know that our balance carried down at the end of the year, which is on 30th September, would be 30,600. Now remember, if they ask us to prepare a T account, you always have to end the account by bringing it down to a brought down. So bring down the figure for the following year, which is on 1st October 2020, balance brought down would be 30,600. So yeah, that's how you do the fixtures account. Now let's look at the provision account. So the provision for depreciation of fixtures account would look like this, where you have your balance brought down on your credit side, which is 6,185. Then during the year you sent off on January 31st disposal worth 285, and income statement income statement you will record 2470, that is your depreciation charge for the year. So when you solve this, you get your carried down as 8370. Again, close this account and bring it down. On your credit side, balance brought down of 8370 on October 1st, 2020. So that's how you do your provision. Now let's look at the final account, disposal. Now, the disposal account, you would have we saw that we transferred the disposal from the fixtures account from your credit side. So here in your disposal account, you record it on your debit side from your fixtures, which is 1500. Then you record your provision on your credit side, 285. Also, the last step that we have recognized earlier, which is recording your payment that you receive for this asset, which is 1150. You write it on your credit side. Why it is credit? Because you received money for this asset, so you would have debited your bank, so you credit your disposal account. And solving this, it shows that you have to add 65 on your credit side, right? This also shows that this, by disposing this asset, you have a loss of 65, which will be transferred to income statement. So you notice in disposal account, you will not have any balance carried down, yeah? So everything has to be settled for the year and transferred to income statement. Yeah, this question is done. So you notice that once you get the workings out of its way, preparing the tea will take a matter of minutes to complete them. Okay, so take some time preparing the numbers right, getting the total depreciation right for the disposed asset, in this case A, and for the other assets right. So once that is done well, then completing the T account will fall easily. Okay, that's it. Now, we have covered everything on disposal in this last video for this chapter. Now, if you would like to receive any additional MCQ questions based on this chapter, please subscribe to this channel, like the video, and leave your email address in the comment section, and I will personally email you the topical MCQ questions for this chapter. Right, that's it from me. Till we meet again in another video, have a wonderful day ahead. Bye.